A parent's concern for their child's financial future is a universal worry, and it's a topic that often sparks curiosity and debate. Today, we're delving into the world of KiwiSaver and the potential challenges it presents when a family member moves abroad. A mother's dilemma, KiwiSaver and the UK move. Imagine this: you've diligently contributed to your daughter's KiwiSaver account since its inception, ensuring she receives the annual government top-up. But now, 12 years later, she's made a life for herself in London, with no immediate plans to return to New Zealand. As she and her partner consider buying their first home in London, a crucial question arises: what happens to her KiwiSaver funds? Here's where it gets interesting. Individuals who permanently relocate to another country can withdraw their KiwiSaver funds after being away for a year. This means your daughter can access her contributions, including employer contributions, the $1,000 kickstart, any fee subsidies, and the returns made by the fund. However, the government contributions, which have been accumulating thanks to your regular payments, remain untouched. Superannuation and the Australian connection. Shifting our focus to Australia, we explore a heart-wrenching scenario. A concerned parent wants to know what happens to their daughter's superannuation savings if she were to pass away after returning to New Zealand. Having lived and worked in Australia for approximately 11 years, the question of accessing these funds becomes a complex matter. According to Anna-Marie Lockyer from Pi Funds, when an individual passes away in Australia, their superannuation savings, including any attached life insurance benefits, become part of a superannuation death benefit. This money can typically be claimed by the next of kin, or the estate. If your daughter had an Australian super fund, the balance would remain claimable, even if it has been transferred to the ATO's unclaimed super register due to inactivity. The MightyApe subscription conundrum: uncovering payment tokens. Now let's delve into a different aspect of financial transactions: payment tokens. A customer encountered an issue with a MightyApe subscription, assuming that outdated payment details would result in a rejected transaction. However, to their surprise, the subscription was renewed despite the expired Visa details. This led to a series of questions. How did MightyApe process the payment with outdated information? How are customers protected when merchants can override payment details without explicit consent? The bank, ANZ, explained that Visa's account updater service automatically updates customer card details for merchants with valid recurring payment authorities. This means that even if the expiry date on the card has passed, the subscription can continue. Visa's perspective on tokenization. Visa emphasizes that its tokenization technology enhances security by replacing sensitive card details with unique, secure tokens. This reduces fraud risk as businesses never store raw card data, and tokens are specific to their intended environment. The expiry date and CVV fields are used for initial authentication, but once a token is in place, transactions rely on it rather than the original card details. Visa's zero liability policy ensures cardholders are not held responsible for unauthorized transactions, and customers can request token cancellation or replacement cards at any time. Bank responsibilities and customer protection. ANZ highlights the importance of customers regularly checking their bank statements to manage subscriptions and cancel unwanted services. They also recommend keeping proof of cancellation attempts to support chargeback processes if needed. So, here's the million-dollar question: how can banks better inform customers about the risks associated with merchants not notifying expiry and CVV changes on credit cards? And what steps have they taken to ensure customer protection in such scenarios? These are the kinds of questions that spark lively debates and discussions. What are your thoughts on these financial conundrums? Feel free to share your experiences and insights in the comments below.